I'm going to show you the split that's happening in the Bitcoin market right now, where retail investors and ETF holders are selling in record numbers, while corporations, whales, and long-term holders are buying more aggressively than they have in years. The reason you should listen to me is I've been in Bitcoin for over 12 years, and I've watched this exact divergence play out at the bottom of every prior bear market. I'll deliver it by walking you through who's selling, who's buying, what the on-chain data shows, and what this divergence has meant historically. So to start things off, Bitcoin just touched 59,000. It's the lowest level since late 2024, which is not even that long ago when you think about it. 18 months, a little more. Spot Bitcoin ETFs have now seen 6 straight weeks of outflows, totaling about 6 billion. Fear and greed index sitting around 24. No, sorry. Last time I checked, I think it was like 16. Things are changing quickly. It's lower than 24 though, that much for sure. It's deep in extreme fear either way. By just about every measure, retail sentiment and ETF flows say the same thing: get out now. But that's not what's happening beneath the surface. While ETF holders and retail traders have been selling, corporations, whales, and long-term holders are doing the exact opposite. They've been buying, and not in a minor way. Today, I want to show you exactly who's on each side of this trade, what the data says, and what this kind of divergence has meant every other time it's happened. So who's selling? Let's start with who's actually selling right now, because the data is pretty clear. Spot Bitcoin ETFs have seen 6 consecutive weeks of net outflows, and in one stretch alone, from mid-May to early June, they lost 4.3 billion, roughly 59,000 Bitcoin over just 13 trading days. That erased nearly the entire year's worth of net inflows. BlackRock's IBIT alone saw a single-day outflow of 182 million on June 23rd. This is largely an institutional story, not a retail one. Q1 13F filings showed institutional investors reduced their ETF positions by 17%, from 313,000 Bitcoin down to 261,000. And in dollar terms, that's a 35% reduction or so, about a third. A lot of this money came in chasing the quote-unquote debasement trade narrative earlier in the year, treating Bitcoin as a hedge against fiat currency devaluation. And then when treasury yields rose and rate cut expectations evaporated, that trade unwound pretty fast. On the retail side, short-term holders, meaning anyone who bought within the last several months, have been capitulating completely. The data shows short-term holder profit ratios well below 1, which means people are selling at a loss, and that's textbook panic behavior, happens every time. So the picture on this side is straightforward. ETF capital that came in for a macro trade is leaving because the macro trade stopped working, and retail traders who bought close to the top are panic selling at a loss. So who's buying? This is where it gets interesting, because at this exact same time, a different group of buyers has been stepping in aggressively. Starting with corporations, on June 22nd, Strategy bought 520 Bitcoin for about 35 million. In the same week, Strive added 759 Bitcoin for about 50 million. These are public companies putting fresh capital into Bitcoin, while the broader ETF market is still bleeding. And now look at the whales. This is even more interesting. On-chain data tracked by CryptoQuant shows long-term holders posting some of their largest accumulation totals on record. One dataset showed long-term holder net position change rising from about 30,900 Bitcoin on June 11th to 79,300 Bitcoin by June 21st, a clear and accelerating shift toward accumulation. The number of wallets holding 100 or more Bitcoin is at a new high for the year, and on-chain traders describe this as institutional money rotating directly out of altcoins and into Bitcoin as a flight to safety. Even exchange reserves tell the same story. Bitcoin sitting on exchanges, which is the supply that's available to sell, has been declining. When coins move off exchanges into cold storage, that almost always signals long-term holding intent rather than a plan to sell soon, because you can't sell if it's in cold storage. So you have two completely different groups acting on the same price action. ETFs and short-term retail are leaving. Corporations, whales, and long-term holders are buying. And that's a pattern. Why this divergence matters is the split between weak hands selling and strong hands buying has shown up before. Retail and short-term ETF capital tends to be reactive. They buy when price is going up and sentiment is good, and they sell when price is going down and sentiment is bad. Classic FOMO greed and fear and FUD. That's not a criticism, it's just how most people are wired. Fear is a powerful motivator. Watching a portfolio drop by 50% triggers a very human response. Corporations, whales, and long-term holders, however, tend to operate a little differently. They've usually been through at least one full cycle already. They know that Bitcoin's biggest moves have historically happened after periods that felt just like this one we're in now. They're not trying to catch the exact bottom. They're accumulating because the price is simply cheaper than it was a few months ago, and they have a multi-year time horizon. Same dynamic played out in 2018 and 22. In both those bear markets, long-term holder supply continued climbing through the worst of the price action, while exchange balances and retail sentiment cratered. And in both cases, the people who were buying during that exact window ended up holding their coins through massive multi-year gains. I'm not saying this to predict exactly what happens next, just telling you because understanding who's on each side of a trade is one of those most useful things that you can do as an investor. When the people with the most experience and longest time horizons are buying, the people who are newest to the asset are selling, that's a useful piece of information. So to recap, once again, ETFs and short-term retail traders are selling in record numbers, while corporations, whales, and long-term holders are buying more aggressively than they have in years. And that split's shown up at the bottom of every major Bitcoin cycle. I can't tell you with certainty that this is the exact bottom because no one can, but I can tell you which side of this trade has historically been right because anyone can see that. If this was helpful, hit like and subscribe. Share it with someone who's thinking about selling right now. Check out the Bitcoin Blueprint. I'll put a link in the description if you want to learn Bitcoin quickly and correctly. And subscribe to the Hard Money Dispatch newsletter. There'll be a link to that too for free insights from me on a weekly basis directly in your inbox. Thanks a lot, and I'll see you in the next one.